Hello friends, please don't forget to subscribe Ashish Chada YouTube channel and press the bell icon to get all the latest updates on upcoming videos. And today I'll talk about one of the very important topic, that is most of the time how we have observed that most of people are coming to us saying that their stop loss hit most of the time, and this is very most of the important topic which I think, because people get frustrated and they, wherever they put their stop losses, usually it got hit. So maybe we'll see a live example today, and this is in front of me. This is the State Bank of India stock, and if you see this stock, this is in an uptrend, and most of the people might be thinking of going long, or either they might be thinking that if as soon as they get some kind of reversal pattern, they might be creating their short position. And this is an intraday chart of State Bank of India. And if you see, this is where the price is open today morning, and market is already closed now. So this chart is already like it's in the evening. I'm recording this lecture. So now yeah, so now the prices is already closed, and now if you see, the prices are going up since morning, and most of the people who are not able to take any kind of long positions in the morning might be thinking of getting some kind of chance where they can get some positions, and they might be looking to go for long position. But what we have observed is most of the time people might be thinking of creating a short position, thinking that the prices have already gone so much of levels. For example, 10 rupees, 20 rupees prices have already moved up. So they might be thinking of some kind of creating short positions, and they might be thinking some kind, as soon as they get some kind of reversal pattern, they might be creating some kind of short positions. So let's see this example and see how the prices work and why most of the time their stop loss got hit. See, this is SPA chart, and for example, if we need to create any kind of short position, we might be thinking some kind of area where we can create some short position. Either the previous uh, support level get broken, so that we can create a short position, or it may be possible that any candlestick pattern, if we can see, we will create some short position. There are a lot of reversal candlestick pattern, and one of my favorite is the bearish angle fill. So if you see, we are not able to guide any kind of bearish pattern here right now. Candlesticks are very powerful tool, but let's see whether that works or not. So I'll move this and see if any we will get some kind of candlestick pattern where we can create any kind of short position. So if you see this level, if you see now, this is where it looked like an bearish angle fill pattern. So this, if you see, bearish angle fill pattern, this is how it works. The prices open, prices goes above to the prior high candle, bullish candle, but they are not able to sustain it, and after that the prices close below the uh, previous low candle. And the same thing happened right now. If you see this candle, the prices were not able to go above this candle. It gone some 1 or 2 rupees, and after that the prices are not able to go above this candle, and the prices closed below the previous candle low. So this is a kind of a reversal pattern candle. So if, for example, we need to create a short position, people might be going short below this candle. So it may be possible that some people have already created a short position, because if you see the next candle, this candle low was below to the previous candle low. So people might have taken some kind of short position, or if not, let's assume that people might be thinking that let's wait for some more time, and now if the prices goes below to this candle, we will create a short position. Okay, so I'll put one of the horizontal line here, and let's assume that we might be going short below this candle, because this is a reversal pattern which we had seen, and the prices already moved up so much. So we might be going below. If the prices again going below to this level, we might be creating a short position somewhere around at these level 232.05. So let's see how the prices worked. See, the prices now again going back, so which again give us some kind of surety that yes, the prices are now planning to come down, and this reversal pattern is going in a right direction. So let's see if, for example, there are people one time, for example, I'll divide some of the people in some of the groups. So there might be group one people who had already taken short position below this candle, below the low of this candle. So if you see the low of this candle, I'll put my mouse cursor here. The low is 232.05. So 232.05 is the low of this candle, which is around these levels. So first group of people had already created a short position where the prices were going down. Second, lot of people might be thinking like, again, if the prices will go down, then only we'll be creating short positions. Otherwise, we will not. And if you see, second group of people also created a short position as soon as prices again going back below 232.05, which is the low of this candle. So now there are two groups of people. One group is already short on this candle. Second people wait, and after that they created the short position. Now let's move further. And for both these group, what could be their stop loss? The stop loss could be above the high of this candle. So I'll place my one more horizontal line, and the high of this candle is 232.70. So I'll move this 232.70. Okay, so now 232.70 is our stop loss, and we are going short. We are already short. Two groups of people are already short. Let's see how the prices work now. Prices again going on the upside direction, but yes, our stop loss didn't hit. Okay, so now there might be third group of people, because market, what I have observed, that market always gives you second chance. Whether you want to create a long position, whether you want to create a short position, market always gives you chances. So if you see, they might, if you see the high of this candle, this green candle, here you can see the high and the low. So if you see the high of this candle is 232.45. Next candle also see 232.50. Again, the high of this candle is 232.50. So prices planning to go above these levels, but here might be some kind of resistance. They are facing it, and prices are not able to close above this level. So now one group of people had already created short at these levels. Second lot of people has created the short at these levels. There might be third lot of people, third group. I'll say third group because I have divided these type of peoples. This is all psychology. Like might be people, for example, if you have not created any kind of short positions now, you might be thinking now I'll create a short position. So that is third group of people. But still I'll wait for the confirmation. Let's see how the next candle works. Again, the next candle is not able to close above, is not even close, not even able to make the high. So there might be third, if you see the high of this candle is again 232.45. So there might be third group of people who might be taking short now, who have missed their short position at this levels, who missed their short position at this level. There might be third lot of group of people who are creating the short at these levels now, because there is one bullish candle, but after that still the prices are not able to make, and this is the area where they are not able to cross. Every time prices coming to these levels are getting hit back again. So there might be a lot of people who might be creating the short positions now. So let's see how the prices worked after that. Again, it's not moving up. So which is good for the people who had created the short position. So there are three groups of people who had created the short positions now. And if you see the high of these candles is almost at the same levels. So it means the prices are getting rejected at the upper levels, which is also a good point for people who had created this short position. And for all these people, the stop loss is this. Stop loss is the high of this candle, which is 232.70. This is my stop loss. So for all three group of people who had created the short at these levels, and now creating the shorts because they are thinking the prices are not able to go above these levels. For all these three group of people, the stop loss could be at this high only. Let's see how the prices worked. Again, it is coming down. which is a good part. For all the three group of people might be thinking and they are happy now. But still, is the uh, prices have moved so much that you are able to book profit? No, because prices hardly moved anything right now. So they might be looking for more profits because as of now, it's hardly some of the points which they have received it. So they might be looking for some more profits and they wait, they will not execute, they will not clear their order right now. But yes, they are in a profit of some marginally some points. Okay. Now see what happened next. It's going down, but that's fine. One of the bullish candle again. Oh, so now if you see again some of the pending orders which might be thinking that I'll create short at these levels only. Prices again given you the chance, and again there is a short position. So all these three group of people had created the short position, but there might be fourth group of people who might be thinking that I'll not create any kind of short positions because the trend is up. The trend is up. I'll not create any kind of short positions. I might be going above long only if the prices are able to cross these levels. Okay. So now there are four groups of people. Remember this thing. Four groups of people now. One, taken short at these levels. Second group of people taken at short at these levels. Third group of people had taken short at these levels when the prices are coming to the same high levels. Now there is fourth group of people who are not creating the shorts, but they might be thinking of going long rather than going short because the trend is up, so they will go long. So three group of people are in short side, and fourth group of people will create long position only if the prices are able to cross these levels. So let's see what happened next. Again, nothing, no major change. Oops, what happened, guys? So all the three groups of people who had created the short at this level, and this level, their stop loss got hit. They are out now. They are in a loss and they are out. They are out. Okay. So this is all the three group of people, not the fourth group. Because the fourth group will be taking, I told you the fourth group might be thinking of creating a long positions only because he is like bullish in the market. He said that no, I'll not be creating any kind of short position. Today the market is uh, going on an upside direction, so I'll be taking only long position. And if you see the volumes, if you are able to see the volumes on my screen, volumes are also pretty high in this candle. So what happened next? All the three groups of people who had created the short position, the stop loss is already hit now, right? So they are not in the market, out from the market. But remaining fourth person who is bullish in the market, their long has been already created at these levels. Or it may be possible that you have placed your long position above this high, which is 272.60. So their highs is also touched now. So your order is executed. Now all the three groups are out, the bearish group, but there is only one group people who are bullish in the market. They are still in the market. Let's see what happened next. So now this group of people are out from the market. Their stop loss is hit. I'll remove this. Okay. Now I'm bullish in the market. And let's see how the market works now. So now there are fourth group of people, guys, who are still in the market and they are bullish in the market. And their long is executed at these levels now. Let's see what happened next. Prices are coming down. So they might be thinking of planning to put a stop loss order. So let's see where they can put their stop loss order. So for example, the prices are coming up. After that, this is the low. So they might be thinking that this might be their stop loss because if the prices will go below to these levels or these levels, this is their stop loss. So I'll put an horizontal line here also. So this is my stop loss in case of I am bullish now in the market. Let me remove this horizontal line from the market. Okay. So now see what happened next. Okay. So again prices are planning to go up, again up, which is good part for us. The prices are near to our break even now because this is the level where we had created long position now. But are we in a profit? No, we are not in a profit. Why we are planning, why we are talking about, why we are discussing about this area only? Because this is the reversal pattern which we had seen. So that is why we are taking long or short positions at these levels. Let's see what happened next. Prices are again coming down. We are in a loss. We had taken a long position at this level. We are in a loss. Let's see if the stop loss got hit now. Oops. Again, the stop loss hit now. So this is the reason why if you go long, if you go short, most of the time people are getting frustrated and they might be thinking what to do next. And every time as soon as they place their stop loss, the and people who might have created the short position at these levels, they might be thinking, oh my God, why I had put my stop loss at these levels, the price are again coming down. See, I told you. And after that they discuss with their families, with their friends, with their traders. See, I know the market has to come down and it is coming down because it is a bearish angle fill pattern, but still their stop loss hit. So as soon as they place their stop loss, it got hit either on the upside, either on the downside. So all the four group of people are out from the market now, and then the market will work. This is how the market works, and this is the psychology behind the market. So what? See, this is the reason why most of the stop loss got hit, because there are a lot of softwares, there are a lot of algos traders use, and if you place your stop loss, most of the softwares and most of the algos are aware about how to hit their stop losses, and this is the reason every time. And this is the problem of the small stop losses. Because see, the stop loss doesn't means that where you need to put the stop loss. Most of the traders place their stop loss 1% or 2% above or below their levels, which I don't use it. I personally don't recommend it also, because stop loss has to be placed on those levels where you think that market is turning around now. For example, if you are in a bullish mode and if you see the market is turning now, there has to be stop loss. It doesn't matter. Market don't know what 1% or 2% at your price level means. So if you place a stop losses based on these prices, most of the time your stop loss will hit. I can give you this surety most of the time. This is the price stop loss. Most of the people, I'll say 99% of the people use price stop loss, which I don't recommend it. See, I'm a fan of candlesticks pattern, but candlesticks are very powerful tool. But I'll recommend don't use it alone. If you use it alone, most of the time you will be in losses. So what you can do is, I'll recommend you can either use some kind of oscillators, some kind of indicators, some kind of moving averages along with the candlesticks, which will help you, which will guide you either to go long or to short right now. So if for example, if you had taken some kind of moving averages at these levels, maybe 15, 20, 25 moving average, I'm sure if I'll apply the moving average right now also, nowhere you have seen that you have to go short, right? Nowhere in the market. So I'll recommend not to use candlesticks alone, and don't put stop losses 1%, 2% like this, or price stop loss. I don't use price stop loss. I always see in this chart there are a lot of things which you can see. Most of the people only observe the prices, but along with the prices there are a lot of other areas also. If I'll talk about other areas, one is the price, which you can see right now, right? That is in front of you. Second is the time also, which is coming. The time is also in front of you. This is the 3 minute candle. This is again 3 minute candle. This is again 3 minute candle. This is again 3 minute candle. So this is again 10 to 12 minutes of trading. So the time is also in front of you. So along with the time, along with the prices, there are volumes also. You can see the volumes. So price, volume, time. This is complete, is called as price action. People usually think that prices are moving, prices are coming down, prices are going up. That is called price action. But from as per my understanding of prices, this is not the real prices are. That is why most of the time the prices stop losses got hit. So I'll recommend, as soon as you go to any kind of candlesticks pattern, Use other tools also along with the candlesticks pattern. Don't use it alone. Maybe whichever indicator you like it, maybe whichever oscillator you like it, maybe whichever moving averages you think that it is good for you, because it depends moving averages also. If I'm a long-term player, I'll use different moving average. If I'm a short-term player, I'll use different moving average. If I'm an intraday player, I'll use different moving average. So use two or three different things along with the candlesticks pattern, and don't put stop losses, very small stop losses. This is the reason why most of the time the stop losses got hit. So hope you are able to get something from this video, guys. Thank you. Thank you for watching. Thank you, guys.